Are you an investor looking for premium market opportunities? Presenting premium and exclusive service for investors by Kalkine.
A choice between investing in a residential property and investing in a commercial space can be complicated. It's generally believed that retail investors find residential properties a little easier to understand. But are commercial property transactions actually that complex? Do many retail investors just overlook the opportunity of investing in commercial spaces? Do you know that many experts are of the opinion that an investment property is an investment property no matter whether it be a house or an office? A tenant is a tenant, a lease is a lease, and returns are simply returns, which is why one should always prudently weigh the pros and cons of investing in residential or commercial opportunities ahead of making the big decision to invest in one or the other. Today, let us bust 3 common myths around commercial properties so that you can arrive at a well-calculated conclusion. Let's begin with commercial properties are costlier. No, commercial spaces are not always more expensive compared with their residential counterparts. It all depends on the size, the location, and the expected rental yield from the property. Small offices and retail units can cost as much as, or sometimes even less, than a housing asset. Did you know that amid the COVID-19 pandemic housing market rally, the median house price in Australia hit a whopping $1 million? Even though not all houses were that costly, many of them had an even higher price tag. On the other hand, if you have $1 million budget, a commercial property investment can also easily be explored. The assumption that a commercial property is always more expensive than a house could be fostered by your imagination based on lack of information and not the actual reality. 2. Commercial property prices have a slower growth rate. By one measure, this can be true. However, the thing is, at any particular time, not many buyers compete to acquire a commercial space. By contrast, a housing asset can attract more people willing to outbid others. And price is a product of demand, and hence, commercial properties might show slower growth. But wait, capital growth of any asset, be it property, a precious metal, or a listed stock, can be very unpredictable, and that the prices of houses will never fall cannot be said with certainty. Residential property prices in Australia came under pressure after the pandemic rally phased out and people had to confront the high inflation on even essential goods and services. At any given point in time, it's quite possible that commercial property price growth is healthier than residential property price growth, or that the decline in house prices is much steeper. Finding a tenant is difficult. Again, this can depend on a lot of factors, but one good thing with commercial properties is that the lease term is comparatively longer, which brings revenue stability to the owner. Experts say that a commercial space might remain vacant for want of tenants for a relatively longer time. But once rented out, the owner can relax for a longer duration. Another factor to consider is that a commercial lease agreement usually includes rent hikes at an agreed percentage every year, which can be missing in residential leases. And also, commercial tenants can be more responsible towards the upkeep of the property compared with residential tenants. All that said, the choice between investing in residential property or a commercial space can still be complicated. And the best approach is to weigh all options, all house types, all commercial property types, and the expected rental yield to arrive at an informed decision. Thank you for watching, and I hope this information will help you to sum up the right decision based on your next property investment. Please do keep watching Kalkine For more market insights and business news, this is Sage for Kalkine Media.